Hello, crypto community. Jeff Kirdeikis here with Gustav Toft of MakerDAO. Gustav, thanks so much for coming on today.
Thanks a lot for having me, Jeff. It's a pleasure to be here.
So MakerDAO is one of the main leaders in the DeFi, decentralized finance space right now. For someone who doesn't necessarily get decentralized finance or why we're evolving into this state of decentralized finance and this trend is emerging, what are the issues that MakerDAO and yourself are seeing in the world that you're trying to solve, or what are the pressing problems right now?
Yeah, so I mean, first off, taking some of the basic concepts of decentralized finance. We have previously seen other types of decentralized finance, which is for example peer-to-peer lending. But in those cases as well, you had an entity sitting in the middle, basically and making sure that everything was that it was supposed to be, right? And whenever you introduce a centralized entity into a system, whether that's a traditional financial system, which I definitely believe that needs centralized entities in certain aspects, right? Or if you take peer-to-peer lending, whenever you introduce an organization that sits and profits off of it, that will automatically make the rates worse for the user, right? So basically it takes basically adds additional fees, so takes some interest rates away from the user and give it to this entity, right? So what we have really seen now is using the accounting mechanism of Ethereum with smart contracts executing different tasks, using that to basically create trustless systems where you can have financial solutions and services without a centralized entity sitting in the middle. So we are probably one of the first projects bringing out of that space. We were founded back in 2014, and I mean the vision for Maker back then was a little bit different than it is today. Back then it was a little bit more we don't like the banks, and we believe that it all should crash and burn. But no, that was of course a little bit over exaggerated, but in general there was a little bit of a different mood back then, where today where we are at now is really that we see that now we have this incredible technology, and we believe that it can solve a lot of problems for people in the real world outside of the crypto space. So that's really the direction that we are trying to move towards, and bring the decentralized finance space with us as well. And that is basically we have created this completely unbiased system, right? I mean, if you look at traditional finance, there's often a strong bias against things such as race, religion, current location, or origin.
Right.
And so that basically means that right now I'm living in Denmark. I used to live in Argentina, and just whether you're in Denmark or Argentina will give you very, very different rates, right? Even though the asset might be the same. So here we have truly created a completely unbiased system that is meant to serve everyone on an equal and fair level, and that's really what we're trying to push out.
Got it. And so for someone who's living in their matrix world and comfortable with banks and comfortable with government fiat, what is that thing where you just want to shake them and you say, but don't you realize this? And here's how we're solving this problem. What would that be, that big shaking moment?
Oh yeah, so I mean, with people like that, I mean, we're just gonna hit them, where they feel it, right? We're gonna hit them on the money. We know that a system like this, where you take human processes, or centralized processes and authority, and you put it out to automated processes, right? I mean, that's just a pure efficiency gain. We have seen that throughout history in many other fields, where technology really has advanced, made these giant leaps of efficiency, and that's the similar effect we want, right? So we want people to be able to gain the efficiency levels of the blockchain doing financial transactions with traditional assets. So we believe that we had a big presentation at DEF CON around this subject as well. What's next for DeFi, and we truly believe that I know that there's a lot of people who are very into the ETH maximalists, we shouldn't bring non-trustless, so legacy assets onto the blockchain and use in DeFi because it would hurt the decentralization aspect of it. But there's also the other part of it, which is we want to reach as many people as possible, and we need to scale, and we need to provide use cases that also uses things from the traditional world. So that's really where we're looking to move towards. And with that, we will take a giant efficiency leap, and that's what we're gonna use to get the everyday consumer on board. Building better products.
Gotcha. And just before the stream started, you were talking about how you were living in Argentina and the situation that happened there. And maybe if you can expand and just reiterate to everyone who's listening, what is happening so people can get a tangible idea on, what a value of decentralized finance can have as well.
Yeah, so I mean, I think there's like a few different aspects to it, right? So when I was living there, for example, I experienced within 8 months, I experienced a drop of the peso around 50%. We see even higher rates now, right? I have a lot of friends still living in Argentina. I have some very close colleagues of mine also working in Argentina. And for example, they just imposed currency controls in Argentina. The currency controls means that you cannot buy more than $200 per month. So that means that, like all of your money is stuck in pesos.
Right.
So right now, actually, DAI is trading at a pretty big premium because that's the only way to get money out of Argentina right now in a safe and stable way. That's actually via DAI. So we have had like a massive increase in demand. We've been mentioning like a lot of like local newspapers because so DAI in its current form is a digital dollar, right? And that's something that is very, very attractive in a few specific markets, Argentina being one of them. So, like when I was living there, like what I started out doing was, I would go down to, the local corner in like a back alley and like trade dollars for pesos, right? Whenever I got paid. I mean, I remember like I had a realization where I was on a business trip in my old job and I was abroad for 3 weeks. And when I got back, like there had been like a jump down in the peso basically. So I lost like almost 15% value of like a stack of cash I had lying on the table, right? And you don't need a lot of those like moments, like experiences, which is something you will have quite frequently if you live in a place like that, to just basically not want to hold it, right? So you like starting out by doing like deals and like these like hidden storefronts and like on like back alleys and then that was really how I started getting like seriously into crypto. And I think a lot of like Argentina has a pretty big community of the same reason, right? I mean, you're looking for alternatives and all of a sudden you have this like digital non-government issued money that you can access everywhere, right? And it becomes very attractive. So right now the DAI is more expensive than the dollar in Argentina because it's more attractive for people.
Right. It makes a lot of sense. And, for places like Argentina, I believe Venezuela as well, who are going through bouts of hyperinflation, this is an incredibly attractive way, like you say, especially if there's limits, $200 a month, that's crazy.
Yeah, I mean, it's completely insane. And they even did, so this is even more insane, right? So the National Bank of Argentina, they went out and they published a list like a month ago of like every single person who had purchased over the limit. So they basically made like a public like shaming list of like how much people have bought in dollars. It was completely crazy.
I mean, I don't think too much shame would be brought to people. I think there's a lot of probably a congruent understanding that that's what people need to live. Right now, DAI is backed or tied or pegged to the US dollar. And, as we're looking at some very bubbly looking times in a lot of the US economies and quantitative easing coming in, although it's temporary, there's a lot of signals that, the dollar may be in for a pretty wild ride in the next little while, as it's at a stable level, at least 2% inflation. With DAI being pegged to the dollar, what kind of risk does that put you guys at if, say, the dollar were to experience a bout of hyperinflation?
Yeah, so I mean, the system is very flexible, right? It's pegged to the dollar because the community initially took the decision that it should be pegged to the dollar. We actually, in the initial proposal for Maker, like it wasn't even a white paper, it was like a Reddit post back in 2014.
Yeah.
It wasn't pegged to the dollar. It was pegged to a basket of commodities and like goods and, currencies, right?
Right.
So at that stage, it was really described as being something that was, like truly above, certain jurisdictional issues such as a currency. But another thing was also that, with Maker already being kind of complicated,
right.
and having to introduce like this like new currency thing, I mean, that was just too much at that time. So that was why we went with the dollar. But I mean, like if something were to happen to the dollar, we would just, it's a synthetic asset, right? So like it's a dollar in the system because it has the nominal value of a dollar in the system. We would need to change some oracles to relay a different price to it, but it's definitely doable. And we already now have the technology ready actually to start issuing other pegs as well. So other synthetic assets, such as, other currencies. So we already, have on the roadmap to issue like Euro DAI, Great British Pound DAI, Singaporean Dollar DAI, Yen DAI, and so on. Like currencies that make sense, and also already looked into, issuing, what do you do if you take like an index peg DAI, like an S&P 500 DAI, and
Yeah.
and a Tesla DAI, Apple DAI, and so on. So all of these things is already on our roadmap. Everything needs to get voted through from the governors, right? But yeah, that's basically like the gist of it. And the same thing. There's also been talk about like Libra having this like basket backing it, and like part of the upgrade we're doing on November 18th, which is multi-collateral DAI. We will have the DAI savings rate coming up, which will be like an interest rate paid out to people holding DAI, right? So we could just create, like a Libra pegged DAI that would have the same value, but instead of, the interest rate going to these like big conglomerates sitting behind it, it would just go to the users of actual currency, right? So, we enable anyone to have like like something similar to like a global deposit savings account with DAI at that point.
Mm-hmm. And how would this savings account tangibly work? And I believe the savings rate is exponentially higher than what a typical bank provides. And how is that possible? And how does it work?
Yeah, so I mean, there's like a few different factors in it.
We
So
don't
the
need to go
first thing
too
is,
deep into the two technicals. Like we can go like high level on this because I know it
yeah,
could be a wormhole for sure.
yeah. So I mean, so first off, there's like the how it's actually possible to actually allow something higher than the deposit interest rate, right? And that's because we don't sit under the same like regulation as like traditional banks, so we don't have to follow the national banks, right? And then there's another, like the system is very flexible, right? So right now, like all the money, all the profits and revenue that the system generates, that goes to the Maker token holders in this like buy and burn function, right? So if you have a system that generates a lot of stability fees against a lot of DAI that's issued, and that will result in Maker burning and basically decreasing the supply. So then instead of taking the entire amount of money to use for Maker burn, we split it and then we give some of it back to the DAI holders. This is going to get put into a contract. So for you to receive the interest rate, that will be like you depositing your DAI into a contract, because like it's not feasible with gas fees to airdrop DAI out to everyone. Like, but basically you will need to deposit into a contract, and then you will just receive the interest rate while it's in the contract. It'll be a little bit different than like what Compound is doing, for example, because there will never be any liquidity restraints on it, because it's not utilized for anything on the other end, right? So basically, like it's risk free in that sense, right? I mean, if the Maker system is safe, then you're risk free. So that's basically how it's gonna work, and like technically, so you need to send it to a contract, but like what we are seeing, the implementation that we're doing with a lot of people already pre-launch is basically just for the user, like a very simple, just like a click of a button, and then you will start receiving it. And then whenever you want to do something with DAI, let's say that I have my DAI in the deposit contract and I want to send it to you, like you would be able to pull and send it in one transaction. So it won't feel like you need to like withdraw it from the contract and then do it like. Yeah, and we're also creating like a representation of DAI. So the same thing you have like C DAI with Compound. You will also have like a DSR DAI that's like a representation of DAI. That's coming sometime next year.
And how is that savings rate set?
Yeah, so the savings rate is set the same way that we set the stability fee now by the governance of the MKR token holders. So they're gonna do weekly adjustments to it. So there's like a few different things that also makes the rate a little bit variable, and that's the fact that like by default every single DAI has a claim on the DAI savings rate, right? But we cannot expect every single DAI to be in the contract at all times. So it will only be the DAI in the contract actually claiming it. So that's probably the thing that will fluctuate the most. So I mean, you could even speculate or like theorize in the fact that during the night where people don't use that DAI for anything, that will be like the most DAI deposited, right? So we see, for example, like interest from exchanges that typically people trade mostly during the day. So from exchanges, to have something without liquidity restraints that the users could deposit a stable coin in overnight and earn an interest rate while they're not trading is something that's pretty attractive too, right? And then there's like the other aspect of it, which is like we want to get DAI out to as many people as possible. And to do that, we need to have as much demand as possible, right? So especially while we're looking to like scale up the system, you should expect like a slightly higher interest rate, and then it will probably stabilize a little bit later on, right? But we already have like some internal numbers that we're like looking at, but how the exact rollout will be, it will be dependent on the community, of course, right? We can only just recommend. So like our risk teams have been looking at this for quite a while, and we have like a lot of kind of like situations played out as part of like the due diligence around it, right? So now we'll see what the voters will actually vote through and like what measurements we will take. But we already saw like a pretty aggressive step down in stability fee. I don't know if you saw that a few days ago. But like a lot of people still have the conception that like the Maker stability fee is very high, but it actually just got dropped down to 5.5% because we have had like a pretty big increase in DAI demand recently.
Gotcha. And so with being able to, like you say, split now, before it was going directly to the MKR token holders, now it's also going to the DSR. Does that in a way not disincentivize MKR token holders, or how are you able to kind of ease the holders' pain, or what's the angle there?
Sure. Okay. So yes. So and first off, like they can also actually contribute money to like other things. So for example, do we want a new front end? They could like take a part of the money and pay a team to build a front end. And so there's like a lot of flexibility of what they can actually do with the money, right? And then like another thing is that the way that you should really look at it, right, is that okay, so we might get 1% or 2% less now, but if this scales up the system to 10 times the size, that should be a beneficial return, right? So it's really something that we see is going to be used to scale the system, gain market share, press it out towards the world. And then later on, when we already have the market share, we have like prove the system works and people like very confident in the system, they will also be able to like accept a slightly lower rate. So I think the way that it will really be done is like whenever we want to scale the system and whenever we have so let's say that we just all of a sudden gets in like a big collateral pool that wants to do a credit against DAI, then it would make sense to have an aggressive DAI savings rate, so then you make sure that like the DAI that comes out of it gets absorbed by the market.
Gotcha. And looking into the future, right now, you're able to essentially back, a DAI loan through, I guess you could say, assets or commodities of cryptocurrency. As you see the emergence of the security token market and digitization of securities, do you see the potential and implementation of using these digital assets to also back DAI-backed loans or DAI-based loans?
Oh yeah, I mean that's like where we're gonna get scale, right? So what we are working on a lot now is getting like some of the first legacy world assets ready to MCD, right? So we have been working for quite a while with like Centrifuge using their tin lake technology to take things such as like invoices, other types of debt instruments such as like mortgages. We even have unpaid royalties from like Spotify, for example, can be used. We work with like a lot of like alternative assets. There's some stuff going on within like wine, for example, that's very interesting as well. So like right now we're really looking into like we have done pilots for like a variety of different assets, and then we're figuring out in which of these places is our system extremely efficient, and like in which of them is the legacy banks already losing money, right? So for example, in Denmark right now, I mean, the banks are losing money when they give out mortgages, and there's like a negative deposit on amounts bigger than a certain amount, right? So like you have a negative deposit rate. Like you have a negative we had a negative mortgage rate actually,
right.
So you got paid to take out a loan, right?
Yeah.
So like of course we could never compete with somewhere where you get a negative interest rate on your mortgage, right? Because no one can, because that's just like losing money. So we've been spending like a lot of time to figure out which are some of the places where our system truly shows its efficiency. And we've been locking in on some of them now. So we're preparing them to basically, initiate the governance process. And, like the governance process is pretty strict as well. So, we need to make sure that they're prepared. We already saw like a few projects that applied that, like the community wasn't that friendly towards. So.
Oh, what were some of those? And what was the reason behind the hesitancy?
So I mean, we have a decentralized stablecoin, right? And there was some of the centralized stablecoins that made applications. You can watch it at forum.makerDAO.com. I just don't feel like mentioning any names right now.
Yeah.
But basically that they applied, and it sparked out like a very big conversation. Like why should we even have these assets as collateral, right? I mean, it's a a shit coin or something.
Right.
Um,
No,
yeah.
it's a really good point, because then it does become this battle between scalability and ideologies, and where is that
Yeah.
balance between? Because if you want to just be fully centralized all the time, you could there's only so much you can do, I feel. So that is a very interesting conversation. So as of
Yeah.
right now, they kind of pushed away these centralized entities because they didn't fit with the ideology. Is that correct?
Yeah, so I think it was the centralized stablecoins, right? So,
Yeah.
like I believe that this might be like an initial reaction, and maybe it wasn't. Maybe it was because of that specific stablecoin. But they go in and they look through the code and everything, and like some guy wrote that this was like a mockery to Ethereum against one of
Right.
them. So like you need to be like pretty prepared when you start the process, right? But I mean, like I definitely believe that there should be a place for most collateral types in the system, like unless it's like an obvious scam,
Yeah.
then you wouldn't want it. But apart from that, I mean, it would just get like pretty bad rates, so it would be very expensive for people to borrow against it, right?
Gotcha.
So like we definitely believe that there should be like a space and like a place for like most collateral types. It's just more like and how do we bootstrap the system with like the best quality of collateral right now, and what would be like the most desirable things to have initially. And yeah, so we've been working on like a lot of different things, and like take a look at the forums. There will be like a lot of more stuff coming up.
Mm-hmm.
We also know that there's a lot of people, especially because they've seen some of the initial responses from the community, then they're like waiting a little bit off until they see like, okay, how do other people perceive our collateral? Because
Right.
if you make an application and you just get slaughtered, I mean, you might have like delayed your possibility to enter like quite a bit.
Yeah, for sure. What are some of the ones that you're seeing that you've put the pilot on that have worked well so far, or that you're really excited about?
Um, yeah, so I mean, like in terms of like things that actually pass like most of the process and only is like gonna go into like the executive vote now. We have like BAD and 0x.
Mm-hmm.
Like both of them are like pretty recognized projects. But like I mean, again, like crypto collateral is probably not the stuff that I'm like the most excited about, because I think it's a little bit of a given that they will enter, right?
Yeah.
Where I believe that some of the things that I'm really interested in is like for example, like invoicing, like trade finance, like being able to provide liquidity and efficiency to a sector like that is something that we believe is very, very big.
Mm-hmm.
Um,
What efficiencies or benefits would you guys be bringing to the invoicing sector?
yeah, so there's like for invoicing companies like trade finance companies, right? They have to have like either they need to like raise capital that they lend out, or they need to have like a deal with a bank where the bank will supply them with the finance, right? And this is often done in like big chunks, and it's something that is quite time consuming for them. So like let's say that you have like an invoicing or like trade finance business like scaling up, right? You need to like not only raise capital to run your organization, like run your business, you also need to raise capital to actually lend out. So you have kind of like have this like double side to it, which both are very time consuming. So with us, basically they would be able to print DAI on the go. So if they get like adopted, it doesn't matter if their production increases tenfold over the next 2 years, right? They would never need to go out again and spend time on like raising capital. And because of the efficiency here, and like we can just like take it against the risk profile as an entity, and their portfolio of invoices, right? So we would also be able to give them like pretty good rates. Like we have seen like invoicing like trade finance rates currently in like a lot of markets, including in Denmark here. We had a meeting with like a pretty big company from here doing this, and they took like 1.5% per month, so like
Mm-hmm.
around 15% per year in a
Yeah.
Danish market, right? We also have seen studies coming out of like Australia where the average is between 24 and 32% per year. So there's like almost predatory rates going on, right? So like we don't need to give them like, I mean, if we give them like just like 8% per year, it would be like a massive gain for them, right?
Yeah.
So like in general, it seems like we have like, that's like one of the places where we can be like very efficient, and we actually can go out and like make a pretty big difference. And then another thing is, it's like it's pretty easy to price as well, as it's dollar nominated debt.
Yes.
And we have already created like the whole framework for, you know, like how the entities is set up, like how we're going to do it, and stuff like that. So we already, like, if you're interested in stuff like that, then look into Centrifuge and their 10 leg project. That's a project that we're doing with them, where we're taking NFTs and we are standardizing them. So, you know, like the system can recognize like a portfolio of NFTs much easier than a single NFT. Yeah.
Gotcha. So MakerDAO obviously is operating as, I guess you could say, an antithesis of, you know, the fiat banking centralized system right now. And a lot of people think that, oh, because we're operating as a DAO, potentially we can side skirt regulations. Block One and EOS gave that a try. They got slapped with a little bit of a fine. How does MakerDAO play into compliance and regulations, and what are the hurdles that MakerDAO is going through right now?
Yeah, so I mean, I think that we have like I need to be a little bit careful about how I talk about these things, of course, but I mean, in regulation in general, we always try to stay ahead of it as much as we can, right? So, you know, before we enter a new market, we get like a legal opinion written, we contact like different law firms, you know, we do like a lot of due diligence to figure out, you know, how to approach this market. And some of them is, you know, just a complete no-go until you have like the regulatory approvals. So, you know, we see markets such as, for example, Japan, where DEF CON just was hosted, right? Where like there's not a lot of projects that are actually allowed to operate in Japan. So, you know, Japan is a place where we have been focusing quite a bit on it, but we don't have the clearance to operate there yet. So we actually don't have any official partnerships in Japan yet. So we are like very careful, right? And at the same time, we have like an open dialogue with regulators all over the world in multiple jurisdictions. So, you know, we try to like come from, you know, like the approach that, you know, that we want to be prepared, right? And we have an exceptional legal team. We have one of the top lawyers, blockchain lawyers in Europe. With us, we have an exceptional legal team in the US with a lot of experience dealing with stuff like this. And we have like pretty good channels to talking directly with regulators, right? So that's really like the approach that we've been taking. And then I think another part of it, which is the fact that, you know, like we as a foundation don't actually receive any profits from the system at all, right? I mean, I think that's another way that you need to be quite aware that like how regulators perceive that. You know, if you come into a new country and it's obvious that you're looking to profit a lot off its citizens, especially with this new technology, or, you know, it could look like a scam or something, you know, that's something that they're like very, very aware of. But, you know, with our system, all the funds and all the profits, 100% is distributed back to the community in form of the Maker token holders and later on the DAI holders as well. So there's really not, I don't think like we have like, yeah, we don't really have like a very malicious standpoint from the beginning, right? And we have never done an ICO, so we have also stayed quite far away from, you know, any like activities that, you know, could be perceived very negatively from a regulator's perspective.
Yeah, and I think that's a very formidable thing that you guys have. You might be the highest ranked token that has never done an ICO. Is that a true statement?
I mean, I don't think Bitcoin did an ICO.
Oh, that's right. But... yeah, of course. Yeah. Good point. Very good point.
Yeah, I agree. Like we're relatively high ranked, and like back then, you know, like we could probably have been one of the projects that raised the most money, right? But now it actually benefits us a lot because our mission was never to raise a lot of money from fundraising. Our mission was always to create this like very unique technology that, you know, could benefit people all across the world. And fortunately, we haven't had any issues finding investors, private investors, neither.
For sure. Yeah, no surprise there. When you're going into these different countries and, you know, regulations apply, I think one thing that different regulators are really looking at is taxation. They just want their cut of the pie. And how does MakerDAO play into personal privacy, yet also balancing with, you know, the compliance with these government authorities to allow them to tax and what transactions are taxable events, and how does that all play in?
Yeah, so this was something that was mentioned a little bit about by Rune, our CEO and founder as well. But basically, the way that we have seen regulation apply in the past to these decentralized currencies, such Ethereum or Bitcoin, is that there's not really been any attempts from regulators to directly regulate the core protocol, right?
Yeah.
Because that's just impossible, right? I mean, how would you regulate something that you cannot control? And we are seeing ourselves kind of fit into a little bit of the same branch. So instead, what do? You regulate the edges, right? So the edges in that means is that you have the core protocol, and then the edges is where the core protocol touches jurisdictions.
Mm-hmm.
So if you have a protocol, for example, like Ethereum or Bitcoin or Maker, that is present in over 100 different jurisdictions, there's no way that a single jurisdiction would be able to apply legislation to what you're doing in every single one, right? So what they instead do is that they regulate the interaction or the edges. So that meant that they regulate front ends, such as exchanges, wallets, other kind of service providers, remittance products, dApps, apps, and stuff like that is what they want to regulate, right? So the approach that we have today is that there will not be imposed KYC in the main protocol or something like that, right? But if you use a service that interacts with the protocol in a specific sense, yes, there might be regulation associated with that. Mm-hmm. But so of course right now we're in a situation today where if you want to buy crypto with fiat, I mean, you most likely have to go through some regulated entity that imposes KYC of some sort. I know there's a few ones that allows you to purchase minor amounts without KYC, but that's really minor, right? If you want to do anything of substance, then you need to pass KYC, and you need to comply with AML and so on of that local jurisdiction. So we kind of see ourselves in the same sense that we would never impose anything on the main protocol, but of course in every single market we operate in, we would need to comply with local regulation, and that would be done through the front ends that we operate with.
Yeah, makes sense, definitely. When you look at look down the road, let's even say 10, 20 years down the road, and MakerDAO has achieved pinnacle scale, or maybe it's 50 years down the road, what utility do you feel banks would have? What do you feel this scale looks like? And what is the ideal vision at scale for MakerDAO?
So, I mean, what we, in regards to traditional institutions, right? I mean, so maybe I'll just take a little bit step back and then explain where we are now, right? Mm-hmm. So right now we're in a world where Maker has done a lot of good stuff in the crypto world. We recently hit partner number 400. So we have 400 different partners and projects all across the world that integrated DAI or CDPs. Mm-hmm. We started out this year with around 100. So we quadrupled our numbers of relationships, DAI integrations in just 10 months, right? Yeah. But this is also in the crypto space. And then if we look at traditional finance right now, there's a lot of banks and traditional institutions that is doing stuff with tokenization, right? So they tokenize different things, but they don't really know what to do with them. Some of them use tokenization because they want to settle internal, accounting systems or something like that. But in general, there's still a pretty big what is going to happen in this space, right? So if I look 10 years down the road, right, I mean, I see that a lot of these banks, they need a lot of infrastructure, right? Technological infrastructure that is separated from a centralized entity, right? And that will really be the collateral of our system, right? Working with, traditional assets, whether they come from a bank or commodity companies or something like that. That will really be the money supply, right? So we will have a lot of traditional assets that comes onto the blockchain for efficiency and trustless, trading and all of these things here. And then we can kind of add the very strong lending use case on top of it, right? Borrowing against these assets, or even, lending out money, which is, something we've seen compound success quite a bit in already now, right? But we really see that a lot of these banks, they need some kind of project protocol to do these things with. And then there's the other side of it. So this is where our supply is going to come from, right? Probably developed countries with strong economies, quality collateral, and hopefully still a pretty big pool of ETH if ETH continues to be as strong as it is today. Mm-hmm. And then there's the other side of the coin, right? Which is the DAI demand, and the DAI demand is something that we already now see increasingly coming from emerging economies and emerging markets, such as for example Argentina and Venezuela that we talked about before, and we really hope that, at one point this will be like the stability, like the stabilizer for people in emerging economies and markets, right? Something they can turn to and trust, that they can receive, like an interest rate on it as well, just for holding it. And at that time, really, make them escape, like the instability of their local financial institutions, right? We don't believe that the success of your life, or like, like the stability of your life should be dependent on, necessarily be dependent on the local financial institution that you have in the country you were born in, right?
Yeah.
I kind of like got to Argentina like a lucky note, right? I mean, I got there because I wanted to go there, but a lot of people are born into it, and a lot of people don't know what they can do, right? I mean, this is the only thing they've ever known, and we want to give people like that an alternative. Yeah, and that's really, that's where we're coming from, and at the same time, giving 100% transparency into it. So, for example, if you go to mkr.tools, then you can, at any given moment, you can go in and see the entire, core engine of the system. What collateral is in it, how's the collateral doing, what's the over collateralization ratio, all of the metrics that you would love to be able to see in a financial institution, right? I remember there's this like a little bit of like a comment or like a statement, which is, like if you imagine a world in 2008 where every single person could go in and review the health of the financial system directly from the mobile phone, right? Would the crisis really have happened? I don't know.
Would have happened a little bit earlier.
Yeah, but at the same time, transparency could have kept those things in check, right?
Yes, yeah.
It probably would never have gotten to the point, and this is not something that we believe will like completely remove financial crises, of course, but it's something that we definitely don't want centralized actors being the main like conductor for why this happened.
Mm-hmm. And is MakerDAO in any way, with the economy on a global scale being in some turmoil and really looking like it could take a downward spiral really anytime soon, are you guys just kind of going to be, if that were to happen, would business continue as usual? Like besides the US dollar and that aspect of things, would anything change in the system, and how would a steep decline in the global economy, in your opinion, impact what's happening with Maker?
Yeah, so I mean, like there's like a few, so like if it happened right now, like I think it's difficult to say, right? Because right now we are still only in crypto. Like what would happen to the crypto prices if a financial crisis suddenly hit?
Mm-hmm.
I know that there's some people who thinks that they would go lower because people wouldn't want their money in such a volatile asset if there's already a crisis. Some people speculate in the prices going up a lot, because the people are looking for some alternative that isn't like the traditional finance. So like depending on like what the outcome of that would be, like we would need to adapt, right? But I mean, like we would definitely just continue as usual. Like some of the assets that we're looking into isn't even correlated really with like financial crises, right? I mean, we have looked into bonds, and like most bonds like can actually do decently well in a crisis, right? Such as like government-backed bonds, treasury bonds, and so on. We have also looked into like the equities market, of course, but it doesn't seem like that will be one of the first collateral types. And even if it was, I mean, we have survived Ethereum going down 90%.
Right.
So hopefully we should be able to manage the stock market crashing like 40% or something. But it really has showed that like our system is already stress test against extreme volatility. But of course, it's something that we would need to figure out, what will happen then. But before we actually know the situation we are in, like we wouldn't do any changes. But yeah, like if it happens, I think it will be fun to see what's really going to play out.
For sure. And I think that's a really important point that you raised, is even with the massive drop in Ethereum, you've been able to maintain your peg to the dollar, which it's not pegged to the dollar. It's through different checks and balances in the system that this is able to be possible. And can you just give a quick high level understanding, maybe for someone who's new, on how does DAI maintain that dollar stability?
Yeah, we should probably have taken this question 20 minutes ago. But
there's lots to explain. I mean, like there's many moving parts, so I agree. It's anyways, let's dive in.
Yeah, don't worry about it. So basically, like the system is built fundamentally around arbitrage, and like having like different like stabilizing mechanisms playing out in like the free market. So basically, like in our system, DAI is always valued at $1. So that means that if you post collateral to the system and you take out 100 DAI, those DAI will always be valued at $100 against your collateral. So that means that if you see the market treating DAI in a different sense, so let's say that you see DAI trading at 1.02, so 2% above $1, you are then incentivized to open a position, right? And like take out DAI and immediately sell it to the market, because thereby, you know, you instantly score 2%. When the supply then expands enough for the price to come back down to $1, you can then buy it back from the market and then, you know, like score your 2% and hit the peg back. And then there's like the other thing is like, what happens if DAI goes below $1, right? And at that point, you are incentivized to buy DAI at a discount, you know, paying back your debt and basically like contracting the supply, right? So removing something from the supply, and thereby the peg will go back up again. Mm-hmm. So this is like the main like arbitrage mechanism we have had so far around like DAI, and then there's like the arbitrage mechanism, right? Then we have like the stabilizing mechanisms as well, which is the stability fee. So whenever you open a position, you will pay a cost for having a position open, right? So this stability fee has gone from like 0.5% up to like 19.5%, and now it's down to like 5.5%. So it's been like swinging quite a lot, and that's because we're still waiting to have the DAI savings rate. But at that point, you know, it's really, if you can imagine, like if we need more demand for DAI, for example, we would just, you know, that would be the same as wanting more supply too, right? So we would just increase the DAI savings rate. So, you know, the interest rate for holding DAI, we could increase that from 2 to 3%, for example. That would incentivize people to hold DAI. And then we have like the stability fee, which is, you know, the interest rate you pay for having the position open. You know, since that has been fluctuating quite a bit, you can imagine that, you know, many more people wants to have positions open if the interest rate is low rather than when it's high. So that's also a way of like controlling the supply of money. So it's quite similar to what a central bank is doing, in the sense that they control, you know, like interest rates on, you know, like specific like lending options, such as, you know, like mortgages, for example. And at the same time, with the interest rate you receive for having money in the bank, right? So this is just like a decentralized application of that, with the goal of having a soft peg to the US dollar.
Gotcha. So it's not necessarily a complex system, but there are many moving parts that can be confusing for people to kind of grasp and understand. You know, when you're in your community, what do you feel are some of the most common misunderstandings or misconceptions around MakerDAO and DAI?
Yeah, I mean, I think it's definitely like a very complicated system. But it's the same thing, you know, like often I tell people, you know, like the traditional financial system is also very complicated, right? I mean, most people don't know what happens. And, you know, like even something such as, you know, like fractional reserve banking is something that, you know, is not debated a lot, right? Mm-hmm. So like, I definitely think that, you know, it is a complicated system, but of course, if you want to create an alternative to something that is equally very complicated, you know, that's just how it plans out to be, right?
Right. Yeah.
And in regard to like misconceptions, I think that, I mean, I think there's just like, there's such a big variety of different questions you often get. I think that like, probably like the process around like collateral adoption is like something that there's like a lot of misconceptions about, right? Or like just like different understandings. I wouldn't necessarily say misconceptions, but there's like a lot of different opinions. And, you know, several times there's been, you know, like strong conversations on Twitter to, you know, like about like what is going to happen. Like, why would we want that collateral? We would want that collateral. Why are we moving away from, you know, like only having trustless collateral and so on? So I think actually probably the misconception I would say is that like how flexible the system is. So, like a pretty direct response to people saying that, they didn't understand why we would want like non-trustless collateral, was that, we could actually create like a purity die. So, like Rune, our founder, he instantly went in and talked about, that we could actually have an instance of the system that would run, that would issue like a purity die where you could only use, for example, ETH as collateral, or you could only use like ETH and like Bitcoin as collateral, like whatever you wanted, right?
Mm-hmm.
And you could actually create, something like that was like trustless in that sense. So I think, like a lot of the things that is happening right now is that people, they view the system and they see it as like kind of like as a decision that the foundation has taken as that how it's supposed to be. But I mean, actually, there's like a lot of things that can get changed. So this is just like the initial iteration, right? We don't know exactly which direction we will be going in the next 5 years. I mean, like we need to have a plan, of course, to kind of like make sure that we have like a direction that we can like push it towards. But like it's really up to the community to kind of like shape how the system unfolds once it's fully live, and the decentralized governance really will be playing in. And there will also be a time where the foundation will actually dissolve. So we at one point we will separate ourselves from the protocol, and it will become truly decentralized, and just we will be like another actor in the system, rebranded. We have an incredibly talented team, so we have a lot of very, very smart people. So like it would be a shame if we didn't work in the ecosystem, but we're like gonna separate ourselves from like the protocol at that level.
Mm-hmm. Makes sense. And looking into the future, and it may be tough to give a concrete statement, but what would that DAO or that decentralized governance look like? For example, one person, one vote isn't necessarily the best way to go about things, but also giving massive amounts of power to a very few number of actors doesn't really make it decentralized at all. What is the direction that you guys are experimenting or looking at right now?
Yeah, so this is one of the misconceptions I was talking about. So people, the way that they see, so we have like a token voting system. So basically, there's like like one token is one vote, right? So that of course means that there is like some concentration of people having like a lot of tokens, right? But the system is really set up in a way so that like even if you don't have a lot of tokens, you can voice your concerns and you can voice them early. So like the entire like governance like way, or like the path from like starting out until like you hit like an approval is quite long, right? And it's quite strict. So you would start out by like going to the forums. In the forums, anyone, even if you hold Maker or you don't hold Maker, whatever, can bid in, right? And it can be like a part of like this like strict governance process. So like if you hold a few MKR tokens and you're like interested in this from like a socio-economical perspective, or just like a research perspective, or something like that, then this is really one of the places where you can make your concerns and like your voice heard, right? So the initial is the forums. The forums it can take anywhere from like a few weeks to like several months to pass this stage, right? But it's really like until you have answered all the concerns from the community, you won't pass that stage, right? Then you get to like the risk calls. So they'll all every Thursday we have like risk and governance calls, where the community shows up, and you can also participate in this call here and voice your opinion whether you hold 0, 1, or 1,000 Maker tokens, right? So this is also something where everyone has like an equal voice. After the governance call, you would be passed on to like the risk teams that needs to figure out what is actually like the risk profile of this asset here, right? And is this something that would be suitable? And if you pass that one, then you get into like polling, and polling is like the last step before the executive vote. So polling, for example, we just had like I think it was like 8 different ERC20 tokens go to polling, and only BAT and 0x passed. So like a lot of the other ones like Omisego, Rep, and Golem, for example, like they didn't pass the polling. So polling is a stage where you can signal your support, or you can signal like that you're against an asset, without actually needing to send your tokens to the voting contract.
Right.
Then if you pass the polling, then you get to the executive vote. So it's like if you pass the entire process and like all the due diligence in every single step of it, right, and you reach the executive vote, then most of the time it should just be like a yes. Like you shouldn't, like if you as like a big token holder, and this is something that we also know, because like a lot of the big token holders, they don't have time to spend, you know, like an estimation if you want to participate in the full governance process of it, it would take you maybe like 8 to 10 hours a month, right? And a lot of our big holders don't have the time to spend the money, like doesn't have the time to spend, you know, going through that entire process. So if you can look back and you can, you know, see that, you know, every single thing has been followed accordingly, and, you know, they pass both the forums, the governance calls, the risk assessment, and so on, then in the end, you should actually just almost always just vote yes.
Yeah.
And then it gets voted yes. Then you actually have like an initiation period, so like a delay period. In this period, the final risk assessment as well as the technical adapter will need to be built for the token. And this period, I think it's currently set to, it's pretty long, it's like 3 months or something. So that means that like in any time of those 3 months, you could actually go in and like contest the approval if you think that something wasn't true or something came up, right?
Gotcha.
So it's like a very long, tedious, and like transparent process. But then again, you know, if you then get voted all the way through, you're in for good, right? So you like at that point, there's like a big incentive for projects to get to that stage, basically.
Mm-hmm. And I think you need that strictness to be able to ensure an effective system, especially one. It's a system that hasn't really been implemented in our world in a large scale really at all much.
Yeah.
So to have these really strict frameworks and long tedious processes, you know, it takes more time than say just the CEO signing a piece of paper and off it goes. But when you're trying to just create a self-organized, not even a self-organized, essentially an entity that runs itself, where you say the foundation becomes dissolved, you know, things tend to need to take a little more time, but it could, for the better part of the ecosystem, depending on what your goals and objectives are, be a massive benefit.
Yeah, I mean, exactly. And this is one thing, you know, like in decentralization, like one of the big arguments against it is that it's not very efficient, right? But there's like the thing is that like in our system, you know, you have this process here that like neither benefits the people holding a small amount of Maker, and it neither benefit the people holding a large chunk of Maker, because they need to coexist within the process, right? And like we also have, for example, we have like a shutdown function where a minority vote can go in and basically like reboot the system and remove bad actors. So for example, if you have like a big holder sitting and just voting no for everything in the end, you could like exclude them from the system with like a minority vote. So there's like a lot of like checks and balances in place, and there's like a full transparent process, right? And like a very strong community around it, where everyone has like the same economic incentive around sustainability. Because, you know, like the only thing that makes sense is that if you get an asset in and that asset flunks after 6 months, I mean, that's going to hurt your own wallet, right? So you want quality collateral that will stay there and sustain itself for years to come, right? 5-10 years and so on. So like in the sense that like the initial adoption of collateral into the system is a little bit inefficient, I think that's completely okay, because then the amount of efficiency gains you have afterwards is what really matters, right? So if you have an asset as a company and you looking to get into the system, as soon as you get into the system, you know, like all of your customers, all of your clients, everyone will get access to this very, very efficient like a permissionless credit platform, right? Lending platform. So that's really, you know, like some of the big benefits.
Definitely agreed. What do you feel is something that isn't talked about enough in the community? You know, obviously being part of the team, you'd have a very in-depth understanding of the project, what's going on, what you're excited for in the roadmap. Whereas the community, whether it's small or large token holders or people just digging in, don't necessarily have the time to really immerse themselves. What do you feel like, or what do you wish was talked about more and discussed more?
So I think there's I think most of the conversations around these things here happen on Twitter, which I think it's not a very good medium for voicing these things, right? And like even having, you know, like in-depth conversations. I mean, of course, like I wouldn't, you know, go into like generalize it saying that like every conversation is bad on Twitter, but I think there's like a lot of like very negative opinions being voiced, which often comes from like a standpoint where they might not have like educated themselves enough before, and there's like a lot of fake profiles and so on. So I think that like there's like a lot of the conversations that for me is, you know, a little bit against like DeFi and stuff like that, where like what I would love to hear more about is, like how do we like overcome the challenges, right? I mean, what is the positive effects of something like the DAI savings rate, right? I mean, I don't think people really, like a lot of people don't really grasp that this is like a risk-free, like high interest, similar to a dollar savings account that you can have anywhere in the world. It doesn't matter where you are. So like when people say that, like these systems here is only made towards crypto people, at the same time, there's something which is, incredible for non-crypto people that is like, like lying there, and like people don't really realize it, like mention or think about it. So I definitely think that maybe it's just because the ecosystem is getting so big already that like a lot of people kind of like see through some of the developments, or only look at some of the things that are like trending on Twitter. but
Right.
but I do believe that there's like a lot of good projects out there, and like UX is something that's been debated heavily, as like something that isn't very strong at the moment, right? And I know several projects that have created like incredible user experiences, such as for example Argent. We also have seen like Mosendo, which is going to be launching in the next few months, right? But projects like that is really taking like and putting like the user experience at like the forefront. I really enjoy seeing stuff like that, and I hope this is something we can use to onboard like a lot more people in the future.
Earlier in the conversation, you mentioned partners, and you had onboarded so many. What would be the ideal if you had to just say one partner where you're like, this would be, if you could just say it right now, and then that boom, that was your partner. Who would that partner be?
I've been asked this question before actually, and I think it's very difficult to like pinpoint something down, right? But like me personally, I really love seeing some of the things that is happening around the world in regards to like microfinancing in emerging economies.
Yeah.
We work with a partner already in Indonesia called Shuttle One. I'm also a big fan of Kiva's work in Africa.
Right.
So like we would love to work with someone like that, that takes in and then would use the efficiency of the blockchain, right? Like use some things such as the DAI savings rate and things like that to actually create financial services for people in these economies, right? So things like that, because we are like if you really look at it, right, you have like Ethereum in the bottom, which is like the base tech layer, and then you have like on top of Ethereum, this is like us. We're like the finance and stability layer. So anyone that can need finance is what we can work with, right? I think, which is also why we're expanding so fast with our partnerships, and then also we are a little bit more than just a stable coin. So I think that helps a little bit too. But yeah, like definitely, like financial solutions for emerging economies is very high on that list.
Yeah, no, I fully agree with that. I think that's one of the biggest and best and least talked about benefits of what you guys are providing. Because, I think a lot of us have the horse blinders on and, okay, how can this benefit us? How can this benefit us? But when you have half the world who's underbanked or not banked at all, there's just massive implications and benefits to this. You guys have the DSR rolling out, I believe on November 18th it is, yeah?
Yes, I mean that's the official launch date, but it needs to get voted through.
Yeah.
So if like we need the mega token holders to come out and vote for MCD launch November 18th.
Gotcha. And so where would they go to do that, just in case somebody for some reason doesn't have an idea where to go?
Yeah, so if you hold Maker or you're interested in learning more about these things, then vote.makerdao.com is a place where the vote actually happens, and at forum.makerdao.com is where the conversations, discussions is around the governance.
Gotcha. And besides the DSR, which is hopefully rolling out on November 18th, what else in the near-term future do you feel is very exciting that whether you personally or the community is really enthused to see in the short-term roadmap?
I mean, at the same time as we launched DSR, that's actually because we're upgrading the system to what's called multi-collateral DAI. So at the same time, that's when we will start adopting other collateral types. So that will be equally as exciting. So we will get this stable coin that is not only much more durable because we will have like a spread in the collateral portfolio backing it. At the same time, it will also allow people to earn an interest rate for holding it, right? So that combination, I think, it's going to be probably like one of the biggest developments, like launches that the crypto space has seen so far. Without underplaying it, it's probably like the biggest application release that the crypto space has seen so far. Because, you know, like so far, like a lot of the main developments has been on like the blockchain level, where, you know, like we don't really see a lot of applications actually coming out yet. And I think this is probably going to be one of the first ones that really has like a big potential to scale.
That's a badass sound clip. I'm going to be taking that one out. Awesome. Well, Gustav, thanks so much for coming on. I think I'm fully behind what you and the team or the foundation at MakerDAO are doing, and being able to give decentralized finance a go into this world and really empower people and add value into a digital economy. So thanks again for coming on.
Yeah. Thank you so much, Jeff.
Yeah. And for everybody who's listening, I'll check you next time. See ya. Cool. Right on.
Yeah.